Let me tell you something right here, and I want you to really listen. In this game, the big money has never been made by catching the daily wiggles or scratching for crumbs. No, sir. The fortune comes from catching the big moves. But the trouble is, most folks never see them until they've already passed. And the reason they don't see them is simple. They're too busy watching the tape like a child staring at a toy, hoping it does a trick. Have you ever found yourself watching a stock tick by tick, asking yourself if you should buy, or sell, or wait, and before you know it, the real move has already happened without you? That's what I mean? Now, people like to believe there's some secret formula, some hidden key, but the truth is much plainer. The market doesn't whisper its secrets to anyone in particular. It shouts them. It lays them right out in the open. The trouble is that most people are too impatient, too greedy, or too frightened to recognize what's staring them in the face. Do you know why that is? Because they're thinking about money in their pockets instead of the movement in the market. And until you start respecting the movement instead of your own hopes, you'll never see the big turns first. I learned that the hard way. Every lesson I ever paid for, I paid double, because the market doesn't give discounts. It teaches you by emptying your pockets, by bruising your pride, by making you sit there and realize you were wrong while the tape goes the other way. Have you had that feeling before when you know you're wrong, but you can't bring yourself to act, and instead you hang on, hoping the market will come back to your side? Of course you have. We all have. And that's why most traders don't catch the big moves first. They're too occupied with being right instead of being early. Let me give it to you plain. A big move starts long before you see it on the tape. The tape is only the final evidence, not the first clue. The first clues come from the character of the market itself. How does it act when bad news comes out? How does it act when good news hits? Do prices sink when they ought to rise? Do they climb when they ought to stumble? That's the market talking to you, my friend. That's the first whisper before the shout. You've got to ask yourself, if the market ignores the obvious, what's it getting ready for underneath? That's where the big move lies. But here's the rub: most fellows look for reasons. They want to tie every move to some headline, some gossip, some tip from their brother-in-law. But the big moves don't announce themselves in the papers. They begin when the market starts behaving in a way that doesn't fit the news, or the earnings, or the crop reports. Have you noticed that? You think you understand the story, but the stock starts writing a new one before anyone's published it. If you're alert, you'll see that divergence. If you're not, you'll miss it and spend the next year asking how others saw it first. Now, don't mistake me. I'm not saying you can predict the future. Nobody predicts. The best you can do is recognize the present quicker than the other fellow. That's what I mean by finding the big moves first. And recognizing means you've got to train yourself to watch the market with a detached eye. Not what you want it to do, not what you need it to do, but what it is doing. Can you honestly say you're watching the market that way? Or are you busy hoping, praying, calculating your profit before you've even laid down your stake? I can tell you this: the men who make fortunes are the ones who can sit back and wait. Waiting is the hardest thing in this business. You want action, you want movement, you want to be in the game, but the truth is, the big move doesn't come every day or every week. Sometimes it doesn't even come every month, and while you're jumping in and out, chasing shadows, the real move is building like a storm on the horizon. By the time you notice the lightning, it's too late. Have you ever sat there, tired from trading in and out, only to see a stock run 10, 20, 50 points in the very direction you once thought about, but abandoned too soon? That's the tax you pay for impatience. Now here's something important: when the market tips its hand, it doesn't do it quietly. The clues are there in the volume, in the persistence, in the way resistance gets tested and tested until it finally breaks. You watch a stock bump against the same ceiling over and over. Most fellows say it can't go higher, that it's done. But I tell you, that's where you start paying attention. Why does it keep pressing? Who keeps buying when others are selling? Somebody knows something, or somebody's accumulating, and that's the seed of the big move. Have you ever seen a stock that just refuses to go down, no matter how much selling comes in? That's the market telling you something, plain as day. But here's the trouble: people talk themselves out of it. They say, it's gone too far already. They say, it can't keep going. They say, I'll wait for the pullback. And then they wait and watch, and the stock never looks back. Meanwhile, they curse their luck and blame the game, when the truth is they just didn't have the courage to act when the signs were right there. Tell me, haven't you done that yourself? Passed on a move because it felt too late, only to see it double again without you. That's the mistake of waiting for perfection. The market doesn't give you perfect entries. It gives you signals. If you hesitate, it punishes you. Now let's speak about courage. To catch a big move first, you've got to act before the crowd. That means you'll feel alone, exposed, and maybe even foolish. That's the price of being early. Do you think the crowd will cheer you on when you step in ahead of them? No, they'll laugh at you. They'll say you're reckless, that you've lost your senses. But when the move unfolds, those same voices will claim they saw it all along. I've lived through that 100 times. And every time, it reminds me, the market rewards the man who can think for himself and act before the mob wakes up. Are you willing to stand alone when the signs line up? And mind this, being early doesn't mean guessing. It doesn't mean buying every dip in hopes of a rally or shorting every rise in hopes of a collapse. That's not foresight, that's gambling. I never gamble, I speculate. And speculation means studying the character of the market until the weight of the evidence is so strong you can't ignore it. Only then do you act, but you must act without hesitation. Do you see the difference? Most traders either jump without evidence or freeze when the evidence is clear. That's why they never catch the big moves first. I'll tell you something else. The big moves come only a few times in a man's career. You don't need 100 of them to get rich. You just need to be ready when they arrive. But readiness is not just money in your account. It's money in your mind. It's the ability to act clean, without baggage from your last mistake, without fear from your last loss, without greed from your last win. Can you wipe the slate clean each day? If not, you'll always be late to the next big swing. Think about the panic of 1907. I was a young man, but I saw it. The signs were there before the crash. The market was acting heavy, stocks couldn't rally on good news, and money was tight. But most men ignored it. They said the panic would pass, that the system was sound. They were late. I wasn't. I sold short when the signs piled up, and that was the making of my first real fortune. Do you think I had a crystal ball? Not at all. I just listened to what the market was saying, not what people were saying about the market. There's a big difference there. Have you learned to make that distinction? And here's another truth. The tape records everything, but it doesn't explain. It just tells you what happened. Your job is to read between the lines. When you see unusual volume, when you see stocks that refuse to break under pressure, or others that collapse without much reason, those are the footprints of the big operators. They move quiet at first, because they can't tip their hand. But if you watch closely, you can see the trail. Once you recognize it, you've got to follow. And if you do, you'll be in before the crowd even knows what's happening. Isn't that where you want to be? Now, let's be honest. Most of you won't do it. You'll nod along. You'll say it makes sense. But when the time comes, you'll go back to chasing tips, listening to gossip, and acting on hope instead of observation. That's the curse of human nature. We want to belong, to follow the herd, to be comforted by company. But the market doesn't reward comfort. It rewards discipline. Have you got it in you to ignore the herd, to act alone, to trust your eyes over their voices? That's the test, and most fail it. The market has a way of tempting you with little profits to keep you from the big ones. You buy a stock, it moves up a point or two, and you snatch the gain because you fear it'll slip away. You repeat that over and over, proud of your little wins. But then one day a stock takes off, and you've sold too soon. The real money was never in the 1 or 2 points. It was in the 10, the 20, the 50. Do you see the trap? The small profits are bait, and most traders take it every time. Have you ever thought about how many times you left a fortune on the table because you couldn't sit still? That's the hardest part, sitting. Anyone can buy, anyone can sell, but sitting tight when you're right, that's the trick. I've always said it wasn't my buying or selling that made the money. It was my sitting. And if you want to catch the big moves first, you have to not only get in early, you have to stay put. That's where most break down. They get in right, then talk themselves out too soon. The market shakes them with a retracement, and they jump ship only to see it surge again without them. Haven't you felt that sting? It's worse than being wrong, because you were right and still lost. You see, the big moves are rare, and they take time to unfold. You can't expect them to hand you riches overnight. They grow, they swell, they gather force. It's like watching the tide come in. It doesn't rush, it creeps, but nothing can stop it. The fellows who make fortunes are the ones who recognize the tide early and ride it all the way in. The others are too busy skipping pebbles in the shallows, never seeing the water rise around them. Do you want to be the pebble skipper or the tide rider? And I'll tell you something else. Most of the time, the best way to find the big move first is to study what the market doesn't do, not what it does. If it doesn't go down on bad news, that's bullish. If it doesn't go up on good news, that's bearish. If a stock refuses to break when everything else crumbles, that stock is strong. If it collapses while the rest of the market is firm, that stock is weak. The key is to watch the exceptions, not the rules. Haven't you noticed how the leaders always show their strength before the move becomes obvious? That's the signal. But it's faint, and only the attentive will catch it. And there's patience again. You've got to let the move prove itself. One day of strength means nothing. One day of weakness means nothing. But a series of days, a persistent character, a stubborn refusal to act as expected, that's the market preparing. You've got to wait for that confirmation, but not so long that you miss the first surge. It's a balance. Do you see how delicate that balance is? Too early and you're guessing. Too late and you're chasing. The art is to act at the moment when the evidence tips from possibility to probability. That's when you step in, and that's when you catch the big move first. And don't forget this: when you're in, you must protect yourself. Being early doesn't mean being careless. You can't risk your whole fortune on a hunch, no matter how strong the signs look. Always protect your line, always place your stop. If you're wrong, get out quick and clean. There's no shame in being wrong, the shame is in staying wrong. Do you know how many fortunes have been lost because a man wouldn't admit he was wrong in time? More than you can count. The big moves reward courage. Yes, but only when paired with discipline. Courage without discipline is suicide in this game. And yet, here's the paradox. To catch the big move first, you must risk being wrong. There's no way around it. You'll never have certainty, only probability. That's why most won't do it. They wait for confirmation after confirmation, until the move is already halfway done. They want safety, but in this business, safety is an illusion. The only safety lies in acting at the right time with the right protection, and letting the market prove you right or wrong. Are you willing to take that risk? I'll say it again, the market doesn't hide the big moves. They're always visible to the man who's trained to see them. But seeing isn't enough. You've got to act, and you've got to hold. That's the whole secret, if you want to call it a secret. Watch the market, listen to what it tells you, act when the evidence is strong, protect yourself if you're wrong, and sit tight if you're right. That's how you catch the big moves first. Simple, isn't it? Then why do so few manage it? Because the hard part isn't the market. The hard part is you. Your fears, your greed, your impatience, your need to be right, your longing for company, those are the enemies. The market itself is neutral. It doesn't care about you or your fortune. It just moves. The question is, can you master yourself enough to see clearly and act decisively? That's the real test. Tell me, do you think you've got what it takes? The truth is, most don't. That's why the big money is concentrated in the hands of the few who do. It's not because they're smarter or luckier, but because they've learned to master themselves, to trust their observation, to act without the need for confirmation from the herd. If you can do that, you can find the big moves first. If you can't, you'll always be following, buying at the top and selling at the bottom, wondering why the game is stacked against you. Haven't you felt that frustration, as if the market were conspiring to make you wrong? It isn't. It's just that you're playing the wrong way. Now, I want you to think back to the last trade you made. Did you enter because you saw something in the character of the stock, or because you heard something from someone else? Did you hold because the stock was acting right, or because you were afraid of missing out? Did you exit because the signs told you to, or because your nerves gave way? Be honest. Because until you start answering those questions honestly, you'll never be ready to find the big moves first. And if you're not ready, the move will come and go without you, as it always does. Patience is the trader's edge. That may sound like a tired phrase you've heard a dozen times, but I can tell you, it's the real difference between the man who gets rich in the market and the one who dies broke. You see, the market doesn't reward the restless. It doesn't pay the man who must be in action every day or every hour, chasing a profit like a dog chasing its tail. No, the market pays the man who can sit still, who can wait, who can watch without acting until the time is right. Have you ever felt that burning itch to make a trade, just to feel alive in the game, even when the market isn't offering you anything worth taking? That itch is the enemy, and patience is the cure. I've watched more traders ruin themselves by doing too much than by doing too little. The man who sits idle when there's nothing to do may lose time, but the man who trades when there's nothing to trade loses money, and worse, he loses confidence. The market has a way of punishing impatience, of baiting you with small moves that look promising, only to turn on you the moment you commit. How many times have you chased a quick rally, only to watch it collapse the next day? How many times have you shorted a dip, only to watch it recover and run higher without you? If you had just waited, done nothing, you'd be richer and wiser. But you couldn't wait. The trouble is that men confuse activity with progress. They think that by trading more often, they're working harder, as though the market rewards sweat. But the market doesn't care how hard you work, it cares how right you are. And you can only be right when you wait for the right conditions. It's like hunting. You don't fire at every rustle in the brush. You wait until the prey is clear, until the shot is certain. Firing too soon just scares everything off and leaves you with an empty stomach. Do you see the likeness? The big moves, the ones that make fortunes, don't show up every day or even every week. They take time to build. Accumulation, distribution, pressure building under the surface, those things don't happen in a rush. They unfold over weeks, sometimes months. The stock that looks like it's going nowhere may be quietly preparing for the run of a lifetime, but only the patient man will be there to catch it. The impatient one will jump in and out so many times that by the time the move truly begins, he's either too tired, too broke, or too doubtful to take it. Haven't you felt that exhaustion when you've traded yourself into a corner and missed the very move you were waiting for? Patience means waiting for the market to tip its hand. One day of strength means nothing. One day of weakness means nothing. But when you see a stock refuse to drop under repeated attacks, or keep pressing higher no matter the selling, that persistence is the clue. It takes time to prove. You must let the market repeat itself, show its character over and over before you commit. Most men can't wait for that. They see one good day and they're in, one bad day and they're out, tossed around like a cork on the ocean. But the patient man sits, watching, letting the story write itself until the ending is almost certain. Which one are you? Now here's the hardest part. Even when a man gets in right, patience is still required, because the big move doesn't happen all at once. It shakes, it retraces, it tests you. The market loves to scare out the weak holders before the real move takes off. And if you can't sit through those shakeouts, you'll sell too soon. Then you'll watch from the sidelines as the stock doubles, triples, does everything you dreamed of, but without you. That's the tax you pay for impatience. Have you ever sold out after a small profit, congratulating yourself on being clever, only to see the stock go on to make a fortune for someone else? That's the pain that teaches you the value of patience if you're willing to learn. Patience isn't just about waiting, it's about sitting tight once you're right. I've always said it wasn't my buying or selling that made me the money, it was my sitting. Sitting through the noise, through the chatter, through the little reverses that shake out the timid. That's the real work of speculation. Anyone can buy, anyone can sell, but very few can sit. Because sitting requires faith in your judgment, faith in your method, and faith in the market's ability to deliver once it has shown its hand. Do you have that faith, or do you second-guess yourself at every tick, letting your nerves dictate your trades? I've seen operators ruin a perfect position by meddling with it. They get in right, the stock starts to move, and then they start cutting in and out, trying to improve their price, trying to be too clever. In the end, they lose the position altogether. If they had just sat still, done nothing, they'd be rich. But they couldn't help themselves. They thought action was intelligence, when in truth it was just restlessness. And that restlessness cost them everything. Doesn't that sound familiar? Haven't you done the same, tampered with a winning trade until you lost it? Patience also means waiting for the big swing instead of grabbing the little ones. The small profits are bait. The market gives you those to distract you, to keep you busy while the real money is being made elsewhere. A stock moves up a point or two, you snatch the gain, proud of yourself. But the big move was 20 points, and you missed it. You traded for crumbs while the patient man feasted on the whole loaf. Think back, how many times have you clipped a small profit, only to see the stock run away without you? Did those crumbs feel good when you saw the feast you missed? The hardest thing in this game is to do nothing when nothing should be done. Men are not built for waiting. They want to act, to be busy, to feel like they're in control. But the market doesn't bend to their need for action. It rewards only those who can wait until the conditions are right. That's why patience is the trader's edge. It's rare. Most can't do it. They'd rather lose money than sit idle. But the few who can wait, the few who can sit tight, once they're right, those are the men who take the money from the rest. Which kind of man do you want to be? I'll tell you something plain. A trader's greatest weapon isn't his knowledge, or his chart, or his capital. It's his chair. The ability to sit in it without moving, without forcing trades, without chasing shadows. That's where the money is made. The tape will tempt you, the noise will test you, the crowd will jeer at you. But if you can wait, if you can let the market come to you instead of you chasing it, you'll be there when the big move finally shows itself. And when it comes, you'll already be ready, while the others are still scrambling, still second-guessing, still too late. Patience is the edge because it puts time on your side. The impatient trader fights the market, demands action when there is none. The patient trader lets the market do the work, and he collects when the work is done. That's the difference, and it's everything. Can you train yourself to wait, to sit, to hold, even when your nerves are screaming at you to act? Or will you give in, over and over, and pay the price that every impatient man pays in this game? Strength shows when stocks refuse to go down. Weakness shows when they won't rise. That may sound like a simple observation, but it is the cornerstone of catching the big moves before anyone else. You see, the market talks to you all the time, not through the news, not through the chatter of brokers, but through the way a stock acts under pressure. And that action, how it behaves when it ought to do one thing, but does another, that's where you find your earliest, clearest signal. Have you ever watched a stock that gets every reason to collapse, yet it holds steady as a rock, even ticks up when the crowd expects it to fall? That isn't an accident. That's strength, and the man who pays attention to that strength, instead of the headlines, is the one who gets in first on the big move. Most traders don't look at it that way. They think a stock that falls on bad news is weak, and one that rises on good news is strong. That's obvious, but obvious doesn't pay. The real money is made by studying the exceptions. The stock that shrugs off the bad news, that rallies when it should be sinking, that stock is telling you a story if you care to listen. On the other side, the stock that can't rise on good news, that droops and falters when everything says it should surge, that's weakness, pure and simple. And weakness is just as important as strength, because it points to a coming decline that the crowd doesn't see yet. Haven't you noticed that the leaders of a bull market always show their power long before the papers start praising them, and that the broken stocks in a bear market were already falling apart before the world caught on? Now, I don't care what anyone tells you, price action always comes first. Fundamentals, stories, tips, they're all second-hand. What matters is how the stock behaves in the face of those things. A company can report poor earnings, and if the stock won't break, that means someone's buying, someone's stronger than the news. That's strength. A company can announce the best results in years, but if the stock can't hold a rally, that means someone's selling into the good news. That's weakness. Do you see the difference? The tape records the truth long before the story is told. Let me give you an example. I've seen markets where every stock in the group was sagging, but one or two names just wouldn't give way. They'd dip with the rest, sure, but they'd snap right back, almost impatient to climb again. That's the kind of action that should make your eyes widen. Because when the general selling ends, those strong stocks are the first to break out, the first to lead the next big move. Haven't you ever asked yourself why certain names run faster and farther than the rest once the tide turns? It's because their strength was baked in while everyone else was asleep. On the other hand, weakness tells its story just as clearly. Think of a market rally where most stocks are surging, but a few lag behind, heavy, sluggish, unable to join the party. Everyone praises them, points to their earnings, their dividends, their future prospects, but the tape doesn't lie. If they won't rise when the whole market is lifting, what will they do when the selling starts? They'll lead the decline. That's why I always tell traders to watch how a stock acts, not what people say about it. The strongest stocks can't be held down, and the weakest can't be held up. Now, why does this matter for catching big moves first? Because strength and weakness show themselves before the move begins. The operator who's building a position doesn't announce it. He accumulates quietly, buying on every dip, supporting the stock when others are selling. The result is that the stock refuses to go down, no matter the pressure. That's your early warning. By the time the real move begins, he's already in, and if you've been watching, you can be in too. The same goes for distribution. When the big interests want to unload, they sell into every rally, keeping the stock from rising even when the market pushes higher. The weakness is there for all to see, but most ignore it because they're blinded by stories and opinions. Do you see how the footprints are left in plain sight? Most traders miss this because they're impatient. They want quick action, quick proof. They don't take the time to watch how a stock behaves over a series of days or weeks. But strength and weakness are not about one day. They're about persistence, about a pattern that repeats itself until it's undeniable. A strong stock will keep refusing to go down. A weak one will keep refusing to go up. But if you're looking for instant gratification, you'll never see the pattern. Haven't you been guilty of that jumping in and out so fast that you never noticed the real character of the stock you were trading? And let me tell you this. A stock that shows strength in a weak market is worth more than a dozen tips, because it means buyers are stepping in against the tide. Who buys against the tide? The big money? The insiders, the ones who know more than you ever will. They're not guessing, they're acting on facts you don't yet have. And their footprints are clear, the stock refuses to go down. On the flip side, a stock that shows weakness in a strong market means those same big hands are selling into strength. They know the story is worse than you think, and they're unloading while the crowd is still optimistic. That's why I say watch what the stock does, not what anyone says. Isn't that a cleaner, safer way to see the truth? I've lived through panics and booms, and the lesson never changes. Before every great bull run, The leaders already showed their strength by refusing to decline with the rest. Before every great bear plunge, the weakest already betrayed themselves by failing to rise with the crowd. The big move is never a surprise to the man who pays attention to strength and weakness. The surprise belongs to the ones who only follow the headlines. Which camp would you rather be in? Now, don't mistake me. Strength doesn't mean a stock never drops, and weakness doesn't mean it never rallies. Nothing moves in a straight line, but the character is there if you look closely. A strong stock will recover quickly, shake off the weakness, and come back harder. A weak stock will fade quickly, give up its rallies, and sink back lower. It's the way they behave under pressure that matters. Do you watch for that? Or do you get caught up in the day's story and forget the bigger picture? The whole art of speculation comes down to interpreting this behavior. To see strength when others see only noise. To spot weakness when others are still blinded by hope. It requires patience, discipline, and the ability to trust the market's message over your own wishes.